Ken Griffin and Citadel have got to be getting mad. And you know why? Because more information keeps coming out. It keeps making them look worse and worse. They're on the verge of losing clients, which, I mean, I feel like they should have been losing clients months and months ago with everything that we've been seeing and people have been talking about, what's been coming out. But the hard part is that how can you definitively prove these things, and you can't make it as a factual accusation. It's like, well, this is what it is leading to be suggested. So, you can't directly say, oh, yeah, they are for sure doing these things, because then you go into court. And a lot of us, we don't want to go to court. We can't afford to go to court. So there's that, right? Now, I'm just going to be letting you guys know right now, I'm not a financial advisor. Everything I'm sharing is just my own opinion. It's my own research. I encourage you guys to go do your own research as well. And let's go ahead and get into what's going on with AMC. So AMC is actually up on the day. It closed out up 7.06%. At one point, it went up to about 15%, and then it started pulling back. And the volume, quite substantial here, which is something that we've talked about before. You get very low volume, then at some point, you get volume that kicks in. The question is, when that volume kicks in, is it going to more than likely have a larger impact on the price going up or the price going down? And luckily, in this instance, we saw that the price was going up. And a lot of people were suspecting this was going to happen too. There was concerns because of the government shutdown potential and the debt ceiling limit, whether that's going to be risen or not, things like that. Okay, so let's actually hop on over here to the 15-minute chart. Something that caught a lot of people's eyes was just, actually, you know what, maybe we'll look at the, let's see, what would it be? 5-minute chart, 1-minute chart. It was, I'm trying to remember what point in time. I think it's kind of like on the 1-minute chart here. So we see this big run that was going up here, minute, all the way up, and then just red on its way back down. A lot of people were suspecting. And we also see it over here. I'll go ahead and zoom in just a tad bit for what's going on there. People are saying, like, what the heck is going on? And then all of a sudden it looks like this huge ladder attack going down. So if you swap this back over to the 5-minute chart, that run up and then just working its way on down, especially over here, as you guys can see, progressively. Just, I mean, this is absolutely very interesting for sure. Big run up and then working its way down, coming back up again a little bit and then coming back down, almost as if it's trying to do a dead cat bounce type thing. Some people are speculating that, oh, they allowed it to run. They hit the top and then they started doing their shenanigans and they shorted it and they're trying to make money going back down again. I mean, yeah, that's possible, but I don't know. Take a look at the RSI. RSI is very low. Even with this recovery on the daily, we can actually see that it still has plenty of room that it could still go back up. Right? So we go and hop over to look at some of the other some of the other information we have here. Utilization at about 86%. Short interest, though, is up 20.77% now. Still going higher, still going high. Actually, I think it was at 21% the other day. But the fact that it's still above 20%, and this was reported 8 hours ago, keep that in mind, it's bad. It's bad. Available shares to borrow, 900,000. We have ETF shares, almost 3.7 million. The fee rate has not changed. That's still been at the 0.8% there. Calls, options, as far as, let's keep an eye on what's going on for, actually this Friday. Sorry, for some reason I thought today was Friday. So we still have 198,156 calls. They're out of the money. They could potentially move to in the money for tomorrow. Let's see how that plays out. And tomorrow is going to be the 1st of October. This month is now done. So September, historically being known as the worst month of the year for the stock market, that's now out of the way, guys. We're just in after hours at the moment. Dark pool, still over 60% every day. When are they going to make some kind of a ruling on this, man? I mean, this is just absolutely absurd that it's allowed to be doing so much. Dark pool data over here, negative 38.4 million shares. Position is down quite considerably to negative $1.5 billion. Still absolutely insane to see that regardless, but at least that number has dropped down in its own regard. And then just moving on, we also can see, oh, this is what I was trying to refer to. I just pull this up real quick for you guys. Like this big run up, like what's going on? Some other information, breaking, possible government involved. Breaking news, in the Hood documents, it appears there were discussions with FINRA regarding position closing only. This suggests there was some discussion with government agencies surrounding the restrictions. This is big. So even more information is still continuing to come out with all of this. And then, actually, I'm going to finish off with that. So next little bit we have here, AMC breaking news. Our plane banner got under Ken Griffin's skin. Why? Because Ken Griffin lied, so there will be no plane tomorrow, or they will file a lawsuit. He is nervous and watching. Need to rephrase the plane Citadel scandal. I looked through this a tad bit, and yeah, they're just trying to say like, oh, we already debunked these things, and it's just conspiracy theorists. And if you pursue doing this, it's going to be an enormous financial like pursuit. Basically, they're trying to say like they're going to sue them for a whole bunch of money. And so the banner ad that they were trying to get listed was saying specifically the words, let's see where it was, Ken Griffin lied under oath. I don't know if they could change it and just have it be like Ken Griffin lied, because it's like, well, there's other Ken Griffins out there. Like, who do we know they're talking about specifically? You can say, oh, it's contextual. You could say that this person is known for the stock stuff. Sure. But I mean, I don't know if they could tie it to like a generalized thing so that legally they're not really being targeted for it. Because wasn't there a Ken Griffin baseball player that he did like steroids or something? Maybe you guys know what I'm talking about. And I think he had said that he didn't do it before. I don't know if that was him, but I mean, anyways, I'm just throwing out random ideas. I don't know if they're going to be able to still do this or not, but the fact is, regardless, they're still paying attention. They're trying to crack down on things. They're trying to kind of calm the waters down, but it's really not looking good for Citadel or for Ken Griffin and prosecutions of things moving forward. It's going to be very interesting to see how the court stuff rules. And if the court rules that they did do violations, then all of this that you're seeing right here, all of this was also a lie. This was them just trying to prevent as much damage as possible. All right, so then the last thing we got right here. Let's go ahead and read through this pretty quickly. One of those screenshots that everyone should see. Is there a good reason to prevent buying it all? How could they default if the users bought stocks with their own money? And so the response was, I love to explain this because I wish the entire American population knew what kind of absolute scams type stuff goes on with these piece of crap brokers. These numbers are fake. It's January 26th and you place It's January 26th and you place a buy order for 100 shares of GME at $50 each. That's $5,000. The brokers who do payment for order flow take your money and say, thanks for your $5,000. You're now accredited 100 GME shares. Now you look at your little quantity owned and see GME is sitting nice and cute at 100. What you didn't know is that when the brokers accepted your $5,000, they didn't actually purchase the 100 shares. This is because brokers have T+2 to settle, which means they've effectively got the trading day plus 2 more trading days to settle. So what happens? Why would they default just because of that? Well, you paid $5,000 for 100 shares of GME on the 26th, and now it's January 27th, and GME is at $500. You only gave them $5,000, and now they have to spend $50,000 to settle their T+2 and actually allocate the shares to you. Remember, they never bought your shares when you made the purchase. Now you've excuse me. Now you're just one person, but I want you to actually go back to a GME chart from January and look at the volume compared to the volume now. Millions of people were buying GME, and the brokers were all thinking they could swindle and profit off of the retailers who were investing. They did not think the price would go up 10 times. So they have to spend $50,000 for just your shares that you paid $5,000 for, a minus $45,000 loss. Now multiply that by millions. For argument's sake, we'll just say 1 million people bought in at $50 and the broker didn't settle the purchase before the price went to $500. Now they have to spend $45 billion with a B to buy all those shares instead of just $5 billion. So how did they fix this issue? Citadel bailed them out, and the NSTC, who would have suffered if the brokers went under, decided to pass on their margin call. They turned off the buy button to push the price back down to $40, and then all the brokers bought the shares they needed and were saved from margin call. Pretty messed up stuff. Let us know what you guys think about all this in the comments down below. I got referral links for free cryptocurrency or free stock in the description. And if you guys are new to the channel, do not forget to hit subscribe, hit the thumbs up like button. Feel free to share this video, and I will see you guys in the next episode.